Hello, fellow traders. 'Tis I, the Rumpled One. Sunday, December 17th, the year 2017. Weekly opening gap. Yeah, I know you're probably wondering where I am, but I had to watch that Steelers-Patriots game. Because those of you who know me know I hate the Steelers. There's not a team I hate more than the Pittsburgh Steelers. I hate all the Pittsburgh teams, but especially the Steelers. Anyway, let's look at what's going on with trading. Once again, I'm just flashing this up here. We'll get back to it though. Money and risk management and the stop loss. So, looking at the weekly, we can see that once again, most of the gaps have filled. We've got the New Zealand US dollar hasn't, the pound New Zealand hasn't, the pound Canadian hasn't, Euro New Zealand hasn't, Euro Canadian hasn't, and Australian New Zealand hasn't. So, looks like there's something going on with the Canadian pairs and the New Zealand pairs. And we need to pick a pair for this week. I'm trying to think of what haven't we really looked at of the majors. You know, I don't think we've looked at the dollar franc. So let's pull up the dollar franc. As you can see here, there really wasn't much of a gap, and it was filled. Looking at the daily, you can see we entered the upper wick zone for a little bit there. So if anything, we possibly look for a break to the upside. We started out in the lower wick zone, and of course it rocketed right out. So once again, you can see how profitable those wick zone trades can be. And we're just starting out in the week. We haven't quite hit any 100 pip ranges. In fact, we're just 4 hours into the market. And looking at the buy zone, one trigger, boom. And once again, you see here, it would have been smart just to go for it from the get-go, because we'd be fading the gap. Once again, traders, this is really not that difficult. No squiggly lines have been harmed. That reminds me, I was supposed to do a squiggly line video. Maybe I'll have to get to that later in the week. And we can see here the rat zones, they're overlapping. So there's really no rat zone trades at the moment. You need that separation. Looking at the H4, let's switch it over to H1. You can see the pivot. It hit the weekly pivot here. There's the future pivot, and I believe it also hit the daily pivot. Let's see if we drop down to M5, maybe we can see, yeah, it hit the daily pivot. And I'm bringing up a new template here, the price action. I wrote a little price action training wheels indicator, and I think I'll probably release it in the final batch this year, even though this will be in one of the mother loads. And I also have the PA multimeter and the turn trade multimeter. So you can see everything here is red. So which way should you trade based on price action? Simple stuff. Very simple stuff. You can see higher highs 0, but we've got lower lows. A couple higher lows here, but we've got lower highs across the board. And just the 5 lines from yesterday's, or the previous, I guess it'd be Friday's candle. The high, the close, the midpoint, the open, the low. We're on H1, as you can see here and here. And you can just see here, taking moves at the horizontal lines. Now, you have to remember, This was previous day, and today I think we've got 4 hours into it. So we're coming down right here, coming out of that upper wick zone. So right here, there is a potential trade. This was the previous day. I think the day starts here. Maybe I should put the period separators on there, but don't really need them. And we're looking at the wick zones. Once again, this shows it using the wick zone indicator. The old 2014 still working. And I decided, I forgot all about the holo zone and all these videos. I didn't add this. I didn't have this screen up. I think if you remember my 2016 dashboard, this is one of the trades. Look for the wick zone, the holo zone, ATR zone, buy zone, rat zone, all the zone trades. But as you can see here, this was the highest open on. Actually, we should be on H1 right there. You can see there's the highest open, and price went down. Lowest open is down here, which happened to be the daily open. Once again, we're looking at the Swiss franc. So you see, there you have it. Now, there was a trader that said something about stop losses, and I was explaining them, but they said, no, we want to know where to put stop losses so we can make $1 million, and we're going to put stop loss. And you see, you're going down the wrong path. That's not what it's about. You want to know where to put stop losses to make $1 million. You put the stop loss at the same place, or at the place where your risk is consistent. So if it's a 1% risk, or $10 or $1, whatever it is, whatever you're willing to lose on a trade, that's where you put the risk. Because if the strategy you're using has a positive expectancy and luck is on your side, you're going to make money. Now, I don't know how long it's going to take you to make that million. Some people it takes them, a couple weeks. Some people it takes a couple years. Some people it takes a lifetime. But your focus on the stop losses is one thing and one thing only. You either make your position size so your risk is constant, or you make your stop loss so your risk is constant. So in other words, if you're trading the same position size, then your stop loss is always going to be the same number of pips away from the entry, because that's the only way the risk is going to stay the same. Okay? Now, if you are determining where your stop loss is, sometimes it might be 10 pips away, the next trade maybe it's 15 pips away, then you need to change your position size. So once again, risk is the same. I don't know how else to answer that question. You see, as Tony Robbins says, if you want a better answer, ask a better question. So sometimes you have to question your questions to see if what you're asking is really going to give you the answer that you're seeking. Because a lot of times people don't ask the questions that need to be asked. They're off. So, I'm not saying this as a put down or to be disrespectful. I'm just trying to give you my opinion, and take that with a grain of salt, on where you put your stop loss. Because, if you want to be able to absorb a 100 pip swing, then you need to make your position size such that you can absorb that 100 pip swing and not get stopped out. It's just that simple. There's no other way around it. There's no magic. For me, depending on what you're trading, if you're trading the buy zone, then you're buying, then your stop loss either needs to be here when it cracks the open, or down here if you want to give it more wiggle room. So if you have it here, maybe you've got a position size of 10, but down here the position size has to be 5, because that's twice the distance. So you have to cut your position size in half. But see, that's up to you. Now, you might say, well, where should I put it? Well, if you do this, if you want to give it the most wiggle room, then right here. You're going to give it basically from here to here is 20 pips. You're going to give it 20 pips of wiggle room once you enter that trade. And as you can see here, you could have taken a nice little profit. And that's the other thing. Don't be afraid to take profit, whether it's 2 pips, 5 pips, 10 pips. Positive pips add up. Just remember that. Positive pips add up. So I don't care if you're taking 1 pip. If you do it 10 times, you've got 10 pips. They add up. Some people want to scoff at, well, blah, blah, blah. You're only making 2 pips. I can make 50 or 100. Well, good for them. You need to focus on what you can do, what you're able to accomplish on a regular recurring basis. So if you can pull 50 pips on a regular recurring basis doing 1 trade, go for it. You're doing a great job. If you can pull 10 pips, 5 times a day, you're doing a great job. If you can pull 5 pips 10 times a day, once again, you're doing a great job. If you could pull 1 pip 50 times a day, you're doing a great job. So, these people that, I don't know, have this ego or whatever, wanting to get into a comparing, body part sizes contest or whatever, it's just ridiculous. I mean, the goal for all of us is to make pips. So if somebody's making pips one way, there's no reason to sit there and down them. Even if they're using squigglies. Hey, if you use squigglies and make pips, more power to you. So I hope that answers that question about the stop loss. I mean, I really do. Because it just comes up so often. But it's really, this is the basics. I don't care if you're a new trader, if you've been trading for, decades. This is the basics. This is what you use. There's nothing fancy. Doesn't matter if you're using trailing stops or martingales or whatever. When it comes down to money and risk management, this is the fundamentals. This is it. There's nothing else. So, with that being said, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne signing off to go drain the banks.